friends, welcome to my channel. Before moving further, we are today conducting a live webinar based on Elliott waves for our Telegram members. My YouTube channel is Sunither, and if you have not subscribed, you can click the bell icon and subscribe to my channel. And our Telegram channel, Stock Market for Beginners, you can join that. This is not a tip providing channel, and this is a learning channel. We share our learning and findings with each other, and we regularly conduct free webinars so that our knowledge is increased. You can join this. In fact, today we are also conducting this webinar, so let us start that. Thank you.
Okay.
Okay, let me share my screen. Okay. So we have one more participant, Parth. So have you gone through that last video? Parth, can you unmute yourself and let me know whether you know about those three patterns or not?
No, today is the first time I'm getting to use. I'm online on your course, so I'll be following soon.
Yeah. So I mean, let me again explain those three patterns, and then we will see. So basically, there is an impulse. Impulse is, suppose this is an impulse. Price is moving from this point to this point, and this is very fast move. So this is an impulse. Okay.
Correct.
And correction is when price is not moving fast, but it is moving in some range. Okay, the last video was regarding the patterns that are formed in correction. So let me explain those patterns again. So suppose there is an impulse. Once this impulse is over, we will get one fast impulse down. Then we will get one corrective pattern like this, and again a fast impulse down. So it means that, let us apply this here. If you get a fast impulse, then you can see there is a fast move. Let me clear it again. So you are getting one fast move again to the downside, and then you see this part.
Yes.
This is a correction, and then you will again get one move. So this is a short correction, but the pattern which it is forming, let me draw it. This is one down move, which is this part. Then there is a corrective part, and then there is one more down move. So basically there are three types of correction. First is in which this correction is there. This correction will not go above this point, and then the next impulse will go below this point. Like if you get this down move, then there will be some correction, and then again a down move, and this will break this one. If this is the case, this is known as a regular flat. We will see some examples, and then you will understand this, but it will be better that after this you watch that first video also. Okay. Let us go to the second point. The difference here is this first point is known as A, then there is a correction which is known as B, and this third part is known as C. You have to make sure that this B part is very slow. Slow means like this, not like this. See, this is, if you see this part, let me show you again. If this, you can see this part, is this slow or fast?
That is fast.
This is fast. So in B we cannot get a fast movement like this. Okay, you have this movement has to be slow like this. So this is the main, you have to be focused on this point. So let us understand second one. Second one also starts with the fast A. The correction in this, it will go above this A, and then this down, this will break this A. So basically you will get one like this and like this. I mean, it will expand on both sides. Let me again draw. There is a fast impulse A, then there will be correction. This correction will break the top of A. This is the top of A. It will break this, and then again there will be a fast move down. This will break this. So this is an expandable flat. Let us see the example. You can see this.
Yes.
See, this is an expandable flat. Let me show you. There is a fast move down. Then this is a correction. This correction breaks the top of this. And
Correct.
then again there is a fast move down which breaks this.
Correct.
So this is expandable flat. In the group yesterday, I had posted one S&P 50 chart, right? In which this pattern was found. Let me show you again.
So I have one question. So this is on weekly chart or daily chart?
I mean, these patterns where they are formed,
Yes.
they get formed on each and every chart. I mean, just your
Okay.
eye should be trained to see them. So do you see this fast impulse down?
Yes.
So this is what is the first time, first part which we explain, the first wave A. Okay, so if this is A, then where is the correction? Is this fast or slow?
It is very fast.
It is fast. And do we name B as fast or slow?
Slow.
So this is not B, right?
Yes.
Is this, now here comes the part, but suppose from this point to this point, is this a slow movement or fast movement?
This is again slow movement.
Right, so B will be here.
Yes.
So if I redraw this, this will be something like this. This is fast A, then this can be all like this correction.
Yes.
And then again a fast move down.
Yes.
So this is which type of correction?
Fast.
This is
No,
first pattern.
no, this is the impulse.
Yes.
Then this is A, this is
Yes.
B, and this is C. Which type of correction is this?
This is third pattern, I think.
So you have to identify like this. This A, you see price growing below that also?
Oh, yes. It's
And
expandable.
yeah, this is expandable, right?
Yes.
So basically all these you have to, you will get an impulse, then there will be a correction, and then again there will be one impulse. This is the, this is our rule. This is our methodology, that first we will get an impulse. We will not trade the first impulse, okay? Then we will wait for the corrective pattern to be formed. Now, there are different sorts of corrective pattern. Now, if we identify this as expandable fat, we will make sure that once this is over, we trade the next wave. So is this concept clear?
Yes.
Okay, we will study this in detail, how to enter this trade. Let me, if now this is the weekly chart, right?
Yes.
Now at this point, when this is at this point, we know that this is B, right? This is A and this is B. We know this, right? Suppose this is not formed, and let me erase all this. Now this is A, this is A and this is B. So what are we expecting now this to make?
It should fall down from B.
It should fall down to form C, right? So
Yes.
when we study waves, we this is the concept. We have to trade the next wave. Now our from weekly this is our prediction that next movement will be on the downside. Okay, but we don't see. Because you see this is trending up, right? So this is our prediction. Now we have to see there should be some evidence also. Now if we move to the daily chart and we draw one trend line here.
Yes, there is a resistance at the top.
No, forget the resistance and this. Right now we don't see any selling here, right? This is still up. Now if we move forward, do you see this?
Yes, there are the red candles.
Even there are 3 to 4 things which we can see here. Let me clear this. First, there will be one trend line breakout. So once a trend line breaks, it means the current wave is over. And which wave was in the weekly? B.
Yes.
So now after B, what will come?
It will C.
Okay.
Again, there is a correction.
Yeah. Even if you are not sure here, are you familiar with this pattern which is here? Do you know some pattern like this?
Head and shoulder. Head and shoulder.
So is it head and shoulder, right? So this is bearish pattern?
Yes.
Now if you trade, now suppose you don't know all this BC, and many people just trade plain head and shoulders pattern, right?
Yes.
But now you also know that this is B and now we will get a C.
Yes.
So is it helpful how wave helps us our thinking, what sort of trade? See here also. Now suppose we are getting a breakout here. This is a double. Many people trade, call this double bottom also.
Yes, double bottom is there.
Right. You can trade this, but you also know that this is B wave, and once it ends, you will get a C.
Yes.
Suppose this is a daily chart and many people want to invest. Will you invest in this part?
No, there is a possibility of fall. No?
Yeah, because there is after C we will get the next impulse.
Yes.
But we will not invest here. Now suppose we get a trend line breakout here. Will you invest or not?
Yes, after trend line breakout on upside, I will invest.
Because there is a possibility of next impulse here.
A. Yes, A wave.
No, not A. Let me discuss about the there are suppose after
1, 2, 3, 4, 5 are in uptrend and ABC are in downtrend.
Yeah, after 1, 2, 3, 4, 5 we get an ABC, and then again 1, 2, 3, 4, 5.
Yes.
So what is the best place to enter?
After ABC.
After ABC, and bottom. When how do you know that C is ended? Because
impulsive move, no? After slow B.
Yeah, C is an impulsive move. So how will you know that you have to invest now? It will go up or after C. This is C.
This I cannot tell because C, it has gone. It has already breached the previous low.
So yeah. So yeah. Let us today. See how we will know that C has ended and now next impulse has started.
Okay.
So Parth is. Are you understanding this?
Yes. I am trying to catch up.
Yeah. There is one more pattern which is similar to this, that there will be A here, and this after this what happens in a running flat, we will get a fast up move. It will be very fast and it will move far away. But after that you will again get one down move, and this will be C. This C will not break A in this case. but it signifies something. It signifies that this is very fast. I mean, momentum is there, and next move will be very fast. Normally B should not go above A.
No, but recently in case of DMart and HDFC Bank, there was an impulsive up move, and instead of going up, it
So
brought the stock down.
which stock?
DMart and HDFC Bank, there was a
Yeah,
huge
yes.
candle at the top, and there was a sudden fall. How to justify this?
This point.
Ah, yes. Yes. How to justify
Now
this?
there are, I mean, I know 3 to 5 ways how this can be justified.
Yes, I want to know.
Yeah.
Because these two are the prominent examples in which a lot of investors have been sucked.
Yeah, this is how, I mean, they trap, and we will all study about those traps. So do you know concept of divergence?
Yes, divergence I know. I studied also from your videos. But
Okay.
this is a divergence in histogram. Which type of histogram is this?
This
Is
is
it a volume histogram
this is
or
MACD,
MACD?
MACD indicator.
MACD divergence.
Okay, let me go to the weekly first.
This also I found interesting. I found it nowhere else before.
Yes, I mean, I have been studying all these things for, I mean, a long time, and
Yes, I
I
have
also
studied your. I have read your post since last 2 years from Quora.
yeah. So basically, initially, I mean, my Elliott
Initially, you
also.
are using classical technical analysis, but just now you are using Elliott Wave. But I
Yeah, I
have
mean,
one doubt. In Elliott Wave analysis is discretionary. So how to have the correct analysis of the waves?
yeah, let me discuss about that. Whenever, I mean, anyone starts technical analysis, they will start with basic like this: moving averages, indicators, and patterns you will get. And when
Yes.
after that, I mean, so I mean, you can also make money just plain by using those things, but then you on some occasions that will fail, right? You must have
Yes.
heard that these patterns fail. Then I
Yes.
learned about demand and supply.
Yes.
So that was also one interesting, like, do you know about demand and supply?
Yes. Yes. I know.
So see,
You are
this is,
using volume profile also for the same.
yeah, volume profile also is one other concept. Let me first focus on demand and supply. So
Okay.
if you know how to draw a supply, you can see this is a supply zone.
Yes. Yes.
How to draw this supply zone, do you know that? I have already created one playlist on my
Yes.
YouTube channel.
One has to catch the candles which have a long upward wick.
Yeah, see, this is the candle. This is
Yes.
one, I mean, green candle. Then you get a one small candle that has 50 less than 50% body. So
Yes.
that
Boring
becomes a,
candle you called it.
yeah, that becomes a base or boring candle. And then you see this movement. This is a fast movement from this. Let me show you.
Yeah. There
This
is
is a
fast
fast
fall.
fall, right? So
Yes. Yes.
this is some supply here.
Yes.
So during some good news, what happens? There is a gap up, but it is only good news is only there to show that price again reaches the supply and hits the pending orders. You
Yes.
see,
It is called exhaustion gap in this
you see,
technical analysis.
now there are, I mean, 100 things by which we can explain. You see this volume.
Yes.
There is a concept known as volume spread analysis. See,
Uh-huh.
the price was already moving, right? So it is
Yes.
an uptrend, but once in an uptrend you get a very high bar, and this bar, is it bullish or, I mean, not bullish bar? You can see there is a significant amount of wick in this.
हाँ, वो माल बेच के चले गए. मुझे अभी डाउट है वो वापस कब आने वाले हैं.
So once price starts to move below this high volume candle, it means generally there is a pause in uptrend. So if you know the case of Lupin there, let me show you.
Yes,
similar.
Lupin has also 40% correction from the top.
See, there is similar sort of candle. I mean, on Quora also explained this. See
Yes,
this,
I read that postcard.
this high volume
Yes, yes,
and this bar.
yes,
If suppose this is volume on the buy side, then you will not, I mean, price will not go below this.
yes,
If price is going below this and this is already an uptrend, it generally means that big players are selling in this volume.
yes, they have already sold.
Yeah, let us not focus on this concept. We will first focus on this wave, how to see
Okay.
whether this from wave analysis. So you see a divergence here. Let me Parth, are you aware of the divergence or not?
Somewhat.
See, what is a divergence is that suppose this is a top, right? This is a top.
Correct.
Then price goes above this top here, right? It breaks this
Right.
top. So you see this, right? It goes up, price is above this top here. But if you see on the indicator from this point to this point, you will see that indicator is not making a new higher high. Ideally, it
Yes.
should be above this point.
Yes.
Correct.
So it indicates that the momentum, this is a momentum indicator. So
Momentum, right.
it indicates that this is not there is no momentum in this up move. Momentum only comes when there is institutional participation. So if there is no, only retailers are here. That's why you will see these divergences. And once you see these divergences, basically Elliott, it means that this is the fifth wave. After the fifth wave, as per Elliott, what sort of wave will come? At the start we saw that after impulse move there will be ABC, right? At the start we studied that there is a 5-wave structure. After that there is 3-wave correction, right?
Right.
So if this is fifth, then we are expecting one A move, right?
Correct.
So at the start we understood 3 patterns, that there is an impulse, then there is one down Faust move A, right?
Right.
If you're not understanding this, you can ask me here only. Did you understand this divergence part?
Yes.
So when you see divergence, you can mark this fifth. Once fifth wave ends, so if you draw a trend line here,
Okay.
this breaks, right? It breaks.
Correct.
So this means that
Breaking.
this means this is A. Okay.
Correct.
So after A, at the start of this video, we understood that there is fast A, then we are expecting one correction of B.
Yes.
And this B can go above A also, right?
Yes.
Right.
So has it gone above A?
Somewhat. The week is above A.
Is it right? So this is what sort of correction is this? It going below A also, and this is going above A also.
Expanded.
This is expanding flat, right?
Yes.
So see, these patterns are present everywhere. Just your eye needs to be get trained to see this. Same pattern was there on this S&P 500 also. Now suppose you at this point, you are expecting, let me again suppose Now if we erase this part, now you are expecting that this is A, this is B, right? Now
Yes.
after B we are expecting one C.
Yes.
So does that answer your question that why it was falling from this point?
Yes, but people say that they have started accumulating HDFC bank. So is it the right time to accumulate? How to see that whether there will be up move or still the down move is pending?
Yeah, let us I will answer that also, but now is the first point clear that why it fell from this point?
Yes.
Okay, and how can we trade now? Suppose if you know this is B part, and now if you draw one trend line here,
Below when it goes below trend line, it is going to fall more.
okay, so this and now suppose we have to trade this also. Do you see a fast move down?
Fast move down and then slow
After
correction.
fast move down, what are we expecting?
Slow correction.
Slow correction. So is this correction?
Yes, there is slow correction.
After correction, what we are expecting?
There is a fast down move again.
So is this move also fast? So how?
Yes.
So if we go, I mean, in this part, which sort of corrective pattern is this?
This is not expanding. It is going third pattern.
This is not expanding. Let me zoom. Let me go to the 4 hour first. This pattern will become more clear in this. So if this is A, this is breaking A.
Yes, it has broken a downside and on
And
upside also.
so is it not expandable?
It is also expanding.
So I mean, what is the meaning of expandable actually? Basically, the stop losses are below the swing lows, right?
Yes.
So basically it hits the stop loss here also, and
Yes,
it
and on
hits the stop
upside
loss here
also.
also. So this is double cheating basically. On both sides it hits the stop loss. And if you are trading candlestick, is this a bullish candle?
This is an bearish engulfing.
No, not this candle. Suppose let me remove this.
If not,
Now
one will
suppose
take
if this is the case, will you buy or sell?
using conventional, it is a breakout.
Right. So why these? I mean, it falls because it is a trap. I mean, if they, I mean, retailers are not buying, then they can't sell, right? So if someone
Yes.
buys, someone will sell. So look at the volume pick. It's up.
It's very small. It is a breakout without volume.
This is breakout without volume. You again see this is the average volume, and see this bar. I mean, last few bars are small, but this bar is very huge, right?
Yes, but compared to the last volume when there was the heavy selling, the volume is very low.
This one.
This
Because
one.
because because see this bar. Many people think this is a bullish case, but this is actually a bearish case.
Yes, yes.
So this may look like volume is not there, but if this is big volume and the candle is very bearish, so this is also selling part only,
Heavy selling is there on that day.
right? So they most of the positions they have entered here only, and then
Yes.
slowly retailers know that now they are trapped, so they also sell their positions.
Yes.
So once they are out, the big institutes again, either they stop selling or they buy more, and it goes up. So looking at this volume again, retailers will jump. But if you know Elliott, you will know you will look for selling signals, right?
Yes.
So see, next candle you got a bearish opposite, right? So
Yes.
this was the point where you will sell, and this is expandable flat,
Yes.
So so now you understood how these patterns work, right?
Yes, but in case of expandable, should we trade within when there is expanding going on or wait till that pattern
You never know.
break
See,
on either side.
at this point, are you? I mean, will you? Are you? I mean, do you know that this will go above, or you can? This can stop here also, right?
Yes.
We never know where this will start. We only know that this is a corrective pattern,
Yes.
right? But we don't know where it will stop. So best way we can trade is wait for our, I mean, signal here, right? Like if we are trading a 1 hour trend line in this case, so if we are trading some sort of trend line, then you will get, or you can look for some bearish pattern like that case.
Yes.
So in this session, I think only 8 minutes are there. I will explain that other part where you, when you will know that buying will start, right?
Okay.
Okay. So let us go back to COVID times, right? This is Tata Steel.
Okay.
Okay. Now see, see after a correction, this is a weekly chart.
Yes.
You will see again the concept of divergence comes here. See, price is going below this point, but on the indicator, let me show you on the monthly chart first. See, there is divergence, I mean bullish divergence here, because you see let me remove this. Are you aware of the bullish patterns also?
Yes, yes, I am aware. This
So
is
see,
the W.
this is
double bottom.
No, this is inverse
Inverted head and shoulder.
Right. So if you got, if you get something like this, then this is the start of impulsive move.
Yes.
This is the first wave. This is some, and see, are we getting the same corrective patterns we were getting there? This is fast down.
Yes, yes.
This is, this goes above A and then it falls little. What sort of pattern is this?
This
I
is a
told
flag type of these three patterns I don't remember, but
this
it is flag also.
This is running flat. I told that in that B goes way above A. So you can see that there will be a very fast momentum in the stock. So you saw that Tata Steel was very high in momentum because of this running flat also.
You had given it other name also, rally drop rally. That type pattern is also there.
Rally drop rally is a concept of demand and supply. So let us not go into that. And so basically, you will get at the bottom, you will first get a, I mean, bullish patterns. You will basically get some bullish patterns. You will get divergences on the indicator.
Some people trade on RSI divergence. So is the RSI divergence better or MACD divergence better?
I personal experience think this is better, because what is the difference? At the top, RSI will show divergence, but suppose there is already correction, then RSI will not give you divergence. So I personally now use this only. So we have, I mean, 4 minutes more. Any questions? More questions for today?
So is it the right time to you accumulate DMART or HDFC Bank? If you try to answer this using this.
See, in DMART, I already had given a target of 3,000, and now many people were not at that time. They were not thinking that this will correct, because this is DMART, right?
You said to 2,600 to 3,000, but it had fallen up to 3,200.
Yeah, why? I mean, why I given that? Because see, there is like, if you know demand and supply, this is a good demand zone.
Yes.
So although this has reacted from, this is now reacting from this tip only, but we will not, I mean, directly jump. Like, so let me go to the 30-minute.
using Elliott, what is your prediction for this?
So yeah, let us go to that only. See this, there is no divergence and this is falling, right? So there is good chance that this will again go up and break this top. There is good chance that this will again go like this and break this top. When this will happen is, I mean, beyond my control, but because there is no divergence as of now, so there will be one fifth wave in which the divergence will come, right?
Yes.
So for that to form, it has to go above this. In most of the cases, fifth wave go above third wave, but there are cases where it doesn't go above this. So what sort of, I mean, what should we wait? Now suppose this is a trend line. Okay, if you get a fast impulsive move here and then you get any of those patterns which we studied today, and then again see this pattern, do you, I mean, familiar with this pattern?
This is the inverted head and shoulder.
Yeah, but this is not formed yet. I am saying that something like this may happen.
Yes, it is incomplete head and shoulder.
Yeah,
currently.
if it has to move up, it will form something like this, and
Yes.
at this point you can enter.
Yes, demand, the volume profile also show demand there also.
Volume profile shows that this is a resistance. If it clears this resistance, then it can go up. See, we cannot, we don't, I mean, we cannot hope that this will go here because this is a demand. We have to wait for the first impulse.
Yes.
And this, after this impulse, the corrective pattern which we studied today, it should not retrace back to this point.
Yes, yes.
Because what is the rule that the second wave does not retrace the 100% of first wave. So if you get a breakout like this, then this will be the part to go long with this stop loss.
Yes,
and target will be, it will be above 5,000.
It is 3250 to 4200, 1,000 rupees around target will be there.
Right.
Above 4200.
Right. But if, I mean, this will go above also if this is the impulsive move.
Yes, yes.
But you should understand this will maybe the fifth wave. So you will get divergence here after this move, and then there can be a big fall also.
Correction will be there.
So I think this we have to stop because only 1 minute is pending.
What are the good books on Elliott analysis? Can we refer to?
I mean, won't suggest to go to books because first you understand this concept, then you can understand from the book.
Okay.
Because whatever I am teaching is not directly Elliott. This is an advanced Elliott.
Yes.
This is not an Elliott concept which I am. I mean, because Elliott did not, I mean, teach these concepts. You will never see that about fast move A, slow correction B. You will never see this concept in a book.
It is